Hello, members. I hope you're doing good and I'm pretty fine. And I hope your trading is actually going on so nicely. And I'm excited to be back with this amazing video so that we can actually help each other grow in this Forex industry. So this is actually lesson 9. I mean, actually, yeah, it should be lesson 9. Um, this is by mistake. My bad. Okay. Yeah, this is actually lesson 9. I'm pretty sure you've actually watched all the videos. You've actually put things together. I've seen some of you have already started making money. You're milking, and that's very exciting because that's all about what we're here for. So today's class, it's actually a psychology. It's a psychology class. It's a psychology lesson where we are going to deal with our emotions, our mentality, and how we think about the market. So we're going to learn about consistency. Yeah. So yeah, consistency is just simply doing certain things over and over again, over and over again. So it's actually a very broad term. It's used in different scenarios, different cases, and all that. But in the forex industry, when you say consistency, it's just all about doing certain things over and over again, so that give you the same results, right? If you're actually doing these things and they're actually giving you money, the, it's quite obvious that if you do the same things again tomorrow, you're going to also make money. So, well, that's what we want to talk about. So we've actually learned our strategy, our market approach, how we find entries, how we trade, and all that. So now we want to focus on doing those things over and over again, trying them with different pairs, trying them each and every time, again and again, to see how they work out, how they play, and how they do that. Yeah. So consistency is just all about following the same strategy, but making sure that are you following the whole plan, the whole process, your trading plan? If you're actually making profits today, are you going to be consistent making profits? Or if you're making losses, are you going to be consistent making losses? Or how can you do things? So that's what we're all about, because with our strategy, it's a crazy way of approaching the market. The rewards are very big, but I've seen that most people actually still losing money, but actually finding the best setups. But you find that the trade is actually in profit, and then after some time it goes back, then they lose money. So we actually want to look into those things, whereby how can you be consistent to always remember what we are looking for in the forex market. So without wasting much of the time, let's dive deep into the lesson. Okay, so consistent is actually comprised of these are the biggest thing in consistency, which is journaling, discipline, execution, and psychology, right? So all these terms, if you look at them I mean, independently, you find that they're also bigger terms. They're very broad terms, and for us to start looking into one by one, it's going to take us forever, because these things, they evolve over time, and they're just infinity. Their descriptions are infinity. So, but so now let's we have already defined it, what consistency is, but now let's see what is comprised in consistency. Like, if you're going to focus on these 4 things and make sure that you're actually doing them, you actually repeating the same things over and over again, you are being consistent in the forex market. If your execution is on point, every time you're always waiting for that perfect entry, that's being consistent. Every time managing your um you're always managing your risk, like you're always being on point, knowing when to buy and when to sell, knowing when to cut losses and all that. You're actually being on point. So if you're actually always journaling your trades, how they're performing, if you're making losses on wins, if you're doing this and that, all that, just recording all your trading journey, it's actually telling you that you're actually on point of being consistency. And another part is actually um if you're actually understanding what the market, if you actually have the mindset of understanding that today the market is not okay, or today the market has actually I've made an L, today a loss, or maybe I made a profit. But you just have to understand, like, being yourself, understanding, being okay to take a loss and being okay to take a win. Don't get distracted when you take a win. Don't be crazy, man. Like, because yeah, that's actually just part of process. Just know that you're actually on point with consistency. Okay, so let's talk about the first thing, journaling, right? um, I see a quite number of people actually don't journal their trades, which is actually very bad because if you journal your trades, you actually like leaving a blueprint of what you are doing. Because, like, let's say today you've journaled all your trades, like all this month, all last month, you have been journaling your trades, and then this month you're back, right? It's gonna be quite easy for you because before you open the charts, just go through maybe 5 pages, the previous 5 pages of your journal to see what the market has been doing. You're gonna see how you've been performing. You're going to track your records, whether it be knowing, let's say you take a loss, you've been taking a couple of losses. You actually know that on this day I took a loss because of this, and I took a very nice win, a very big win because of this. So that's all about generating. Like, you make a loss, you record; you make a win, you record. It's just like in business, you actually keep track of whatever you're doing so that you should know your progress in business. So but there's a lot to generate. But so yeah, so just want to also let's talk deep about on journaling, that the things that you actually journal, what do you put down, right? So the things that you put down, the first thing is actually the whole data. Maybe, yeah, today I'm good, I'm fine, uh, with lots of energy, positive mindset. And I actually looked at, so you be like, you come with a date. So this is actually a date, how you feel. So that when you look at it next time, you'll be like, I was sick, I took this trade and I killed it. I'll be like, oh, which means when I'm sick, I look at perfect entries, I take perfect entries. So you should consider getting seed again so that you can take the perfect entry. But anyway, you put data on how you feel on that day. So the next thing uh, of course, date is always the first thing. Yeah, date is always the first thing. And then when you put a date, remember to put time. Uh, yeah, and when you put time, up on the time, you should also indicate the trading session, right? Uh, Trading session is very important. That with the time of the time that you're trading, maybe you've actually transit from one session to another. You also indicate, I was trading in Asian session to London session, something like that. And then the next thing that you also have to decode is time, right? Oh, I've already said about time, date, but pair, right? The pair that you're actually looking at. What pair were you trading? So you have to also indicate that. It's very important. And then another thing that you also have to indicate is what direction were you looking for, right? Yeah, direction. What direction were you looking for? So if you find the direction, then the next thing you need to also put something like, how did you enter, right? How did you enter? Was it risk trading? Was it a risk entry, or it was a confirmation entry? Confirmation entry. Because you need to know that I actually made this mistake because I took a risk entry or a, a confirmation entry. And then the next thing that you also need to put down is um, your RR, like how much money will you risk, reward ratio, right? How much were you looking forward to make on that single trade, or yeah, how much were you risking and how much were you looking forward to make? You can also, yeah, indicate that. And in the end, already you put a profit if you have made money, or if you have made a loss, you said it went in loss, or if maybe break even, maybe, yeah. So you would also indicate that, or maybe you would also indicate it as in percentages of how much you have made. So this is actually what you do on a daily basis. So if you can have these things, or just have a template of this of printed of this printed so that you can always just mark or just record, indicate what is happening. And yeah, it's gonna be good for you. But if you can get a diary, that's also good. So that's about that's about journaling. So the very good thing about journaling is that it will remind you, right? It will remind you what to do again when you are right, and it also remind you what not to do again when you're wrong. Okay, so you should also consider that. And having a journal, guys, it's a very nice thing because it's a blueprint, guys. It's a blueprint. Every day you wake up, that's where you start from. You know that this is the thing that you need to focus on. So um, that's quite clear. Let's move forward. Psychology is the next thing that we're going to look at. So this is actually a very interesting part because most traders have actually lost money because of lacking that mindset um, of being themselves. All right. So you need to focus on what you know in Forex, right? Focus on what you know always, right? You should know that you are not missing anything apart from focusing on what you know. Just make sure that what you know is actually what works. So that what works is actually what I've already told you guys, the smart money concepts. So just focus on what you know. Don't actually whenever you see somebody maybe is taking trades in any other way or doing crazy stuff on the forex market, let them be there. Just focus on what you know, focus on what you have learned, because if you're gonna pay attention to what you have, if you're gonna pay attention to what other people are doing, you ain't gonna become consistent in this game, because you're actually, because like how many people are you going to look at, like how many people are you going to look, how many things are you going to copy from? Just have that thing and focus on what you know, focus on that craft and refine it, make sure it works for you, because that's how you do it. And then somebody is also going to look at you and be like, I want to trade like the way this guy trades, because like, you know, they'll try to copy, but it won't work in the first time until they focus on it, like they pay attention and they get to learn the thing. Okay, so being able to explain what moves the market, that's all what matters. Just being able to understand what is happening in the forex market, just being able to know what are your interesting zones, what you're doing. That's what matters, and focus on that thing, right? You're not missing anything. If you know what moves the market, then don't be the person who be like, what is happening that side? What is happening that side? Okay, you know, I hope you understand. So just understand on what moves the market, you are gonna make money in this game. So I don't think there's any other thing uh that makes a lot of sense, like the smart money concepts. So if you just focus on that, understanding, go deep, make a lot of research about it, and yeah, you're gonna make money in this game. So um you need an understanding of what moves the market, as I've said, um, and uh, and you also have to understand that in the forex market, there are wins and losses, and all those things will come. Like when you take a trade, two things are involved. It's either going to take a win, you're going to take a loss. But what matters is how much are you willing to lose when you are losing, and how much are you willing to make when you are making money. That's the most important thing, because most people, they actually have so much confidence in an entry. They'll be like, this one is gonna go in the direction without you want, or what I mean, whether you want or not, it's gonna be in profit. And then what do? Pa, pa, pa. You enter the trade with big lot sizes, and then the trade goes in against you, and then you'll be like, what did I do? You lose a lot of money, and then you start blaming yourself. But did you understand what was happening in the market? Maybe you entered at the time the market was on liquidity. Maybe you entered the time I was doing a medication. Maybe you entered the time was, maybe it was a risk entry. You didn't consider all those things. So just make sure you understand what moves the market, and understand where you need to enter, where you need to buy, and also understand the risk that comes with that, so that you can always be on the right side, on the safer side, with a positive mindset. So on psychology, it's actually subjective. Most people look at this thing in a different perspective, but the objective part is that you need to understand that in forex there are losses and there are wins. But the most important thing is that focus on what moves the market, focus on what you know, Otherwise, you're not missing anything, and just be there. Sometimes people feel like they're trading, and then they feel like maybe the brokers like, the brokers like they're hunting them. They're whenever they take a buy, whenever they take a loss, they feel like maybe the brokers are seeing what they're doing, because every time they put a stop loss, the market is just coming in that area. Maybe every time I do this, no, the matter is what matters is just understand what moves the market, just understand the price. Things are gonna be pretty good, right? You need to be on the 10% that make money, not the 90% that lose money in Forex. So having said that, let's move to another another part. So the next thing that we're going to look at is discipline, right? Discipline is the very interesting part. And I like this part a lot because um, it makes more much sense to me, right? So yeah, in a discipline, you need to understand that every day is a new day, right? You need to understand that every trade is a new trade. Every time you come on the charts is a new fresh, okay? And before, a disciplined trader has a trading plan, right? A disciplined trader has a trading journal. A disciplined trader knows when to do things, when to act, right? And then a disciplined trader um, is actually like ready, well prepared for anything, whether in L, whether in LOs, okay? So on discipline is actually a very broad thing that will actually almost engulf everything that I've put here. But being disciplined is actually being smart, right? So the first thing I've said, having a trading plan is always the first thing. Most people always go on the charts and then start executing trades and be like, where is your trading plan? Like, how are you doing these things? Like, what are you looking at? What is your reference of all doing things? Some people might be like, everything is in my head, everything is in my head. But you would see that every time you're doing things, you're actually coming with a different approach. Okay, doing things, and then you keep on losing money. You start asking yourself, what is it that I'm losing money? It's because you're actually coming on the charts with the yesterday's mentality. You've forgotten that you take yeah, a loss because you did something like this, and then today you're coming with the same mindset, doing all that. No, you need to understand that every day is a new day, and every day the market is evolving. So you need to trade based on what is happening to the price, right? Trade what you see, trade what has been presented to you. Don't trade what you think or what you think is going to do. You cannot move the market. Your trading capital is very small to move the market, because the market actually moves based on demand and supply. And then for there to be demand and supply, there need to be trillions and billions and a lot of money. Okay. So you need to understand that we have to trade what the market has presented to us. We need to trade what the market uh, as has been presented to us. Don't be that trader will be like, it's gonna go up, it's gonna go up. Like after 2 hours, it's gonna go up. The thing is going down and be like, it's gonna go up after 3 hours, it's gonna go up. And then boom, you have actually blown your trading account. Blow, what did you do? If you're traded to what you're seeing on the charts, like we always say, in a bullish market, we buy, or in a bearish market, we sell. Just focus on those things, because that's where money is. Like, we don't be on the opposite side of the big banks, right? On the big banks or the interbanks price delivery algorithm. So just always make sure that you're always on point, have a trading plan, always keep updating your trading plan, because things are changing on a daily basis. The way we used to look at the market 5 years ago is not the same way the way we see the market today, and it's not the same way we're going to see the market tomorrow. Be okay with that. Okay, just make sure you evolve on a daily basis. So discipline is actually a very big term, but um, um, yeah, I'll not talk much. Another thing about discipline is um, knowing when to buy and when to sell, right? You need to be disciplined. We're actually waiting for price to come in your PIO, mm, in your order block, point of interest, right? And then because it's actually very far, you'll be like, because it's gonna come in my PIO, I'll be scabbing as it is coming, And then you're starting scabbing. You started making losses, making losses. Do you know that that is not part of your plan? Your plan is to wait for the market to come in your point of interest so that you can take a buy, you can take a sell. Why don't you just sit down and wait? Like, you're wasting your money, losing small trades because you know that the market is going to come in that area. Don't do that. Just sit and wait for price to come in in your zone. That's being disciplined, right? That's all being delivered by having a training plan. Some days I would stay a day or 2 days without taking a trade. Why? Because the market is not presenting what is not coming in. My point of interest is not giving us what the clear picture of what is happening, right? So we always have to make sure that we are disciplined. We are focusing on the game. We're trading what's happening. Like, I'm pretty sure you guys are understanding me. So even when you enter a trade, be like, now the trade is actually in profit, and then because you're just in profit, what do? You keep on entering trades like, it's already in profit, let me enter. Then the next thing you do, you see the market coming down, it takes you out, you lose money. Be like, what did I do long for the market to come back to me? It's because if you had actually been disciplined based on your on your entry criteria, that how much money are you willing to lose, how much money are you willing to risk, that would have been enough. Because you see, you've actually barcoded, entered more trades, and then the market has actually come against you. Like, was that in a trading plan? So whatever you're gonna do that's not in a trading plan will actually cost you. You're going to pay the price for that. So always be the disciplined trader that follows his trading plan. You need to be comfortable with the truth that this is not a get rich quick scheme. This is not a get rich. This is not an overnight game. It's something that grows over time, right? It's gonna take time, right? And you need to be okay to that, because this is a business. But once the skill has settled in you, once the genes have understood, settled, have built kingdoms in your mind, in your brain, in your whatever. Um. Okay. That was bad. That was bad. That was bad. Yeah. Whatever. Sorry for that. Um. Sorry for that. Okay. So. Where was I? Yeah. So whenever these things have built a kingdom in you, they're going to stay in you, and they're going to actually just telling you what to do. So it actually thinks it's something that grows over time. Okay. So we will say the most important part of the building is the part that you don't see, which is the foundation. And that's the most important aspect. And another thing is that um, yeah, execution is actually the last part, because that's when you've done everything, you get to this stage to take a buy or sell, the execution stage. Okay. So what you have to know is that poor execution, right, unnecessary execution, like inconsiderate execution, will result to poor results. Okay. Poor results. Okay. If you're going to always execute consistently based on your plan, on your what will actually give you big results, right? So if you just, I hope this makes sense and it's clear, right? Poor execution, poor results. Smart execution, consistent execution, more reward, right? Because remember, our strategies is focusing on us, giving us small, tight stop losses, allowing us not to risk a lot of money, just giving us that space of us going in big with a small RR or a big RR. I mean, um, a small risk ratio. Okay, so having said this, on execution, there's not a lot, but just know that if you're going to poorly execute, you can just come, guys. Like, you can just come from your or wherever you were, and then open your phone. You see that there's a engulfing candle, a bullish candle, a pin bar, and then boom, you're in. No, that's not how we do it, right? Don't be like the other traders. Don't be like the retailer traders. We need to be smart. We need to think smart. Always have a plan. Like, always see things at a bigger picture, always plan ahead. That's gonna give us results. That's gonna give us long-term results. You don't just open your phone, enter trades, and then be like, then you'll be like, what did I do? No matter how big your account is, no matter how big or no matter how small, no matter how small your lot size or whatever, but always be smart, always be smart. Okay. So having said that, guys, this marks the end of today's lesson, and I'm very excited that we have been together throughout the lesson. And Today's lesson was just all about consistency, which is part of the psychology part of training. But as there's more that we are going to share in this case, because we haven't talked about risk management yet, but we are going to look into that level, as in when to buy. I mean, we have already looked at when to buy, but how long should I hold my trade? Where should I put my take profit? Where should I put my, like, when to cut, when to protect, lock in losses, something like that. We're gonna look in the next lesson. So, but for now, I want to wish you a very good day, a very good night. Let's meet in the next class.